How many people have questions from the audience to begin with? Anyone a burning question from the audience? Just to kick things off. Okay, if you don't, I will let each one of our all-star VC dealmakers talk a little bit about what project they're working on now and what excites them in the tech world today. So Eric, why don't you start? What are you working on today, and what is it that really you think is the future of tech? That is.
Well, PQ Capital, we're a fund of funds, global fund of funds, a Chinese firm, and we invest in great firms like the ones represented here. We think a lot about global capital flows and how to support global entrepreneurship. So our hot button is right now is really how do we help U.S. companies that are invested by our U.S. GPs be successful in China? And it's hard to do, as we talked about a little bit today.
Yeah, we did. We talked about MySpace in China, and that was yesterday's news, but it's still a problem today for American companies to get into the China market. So that's a big project we're working on. Yeah, Jay, what about you?
Yes, so actually along that topic of helping U.S. companies breaking into China, so we try to help with China, but we also try to help with other parts of Asia as well. So Transient Capital, our firm, has been around for about 9 years, and all of the principal partners, including myself, have a similar background. All of us used to run the corporate investment operations for Asian tech companies, where we were trying to identify innovative tech companies here and try to connect them into the mothership. And if there was actually a business partnership opportunity, we would invest. So I did that for Samsung. My partners did that for other firms like SoftBank, Foxconn, UMC, and Credit. And so, because of that, I think there is, in general, so much interest right now in Asia about some of these emerging frontier technologies out of Silicon Valley. I don't think it's any secret some of the hottest consumer adoption and investment areas in VR, AR today is coming from China and other parts of Asia. The big platform plays, the device manufacturers, as well as consumer adoption is very dramatic there. So that's one area that I'm spending a lot of time on. Another area that I'm personally spending a lot of time on is actually robotics. So robotics is, I have more of a hardware background, but robotics has been around for decades now, and the category of robotics that is most interesting today is actually more service robots or consumer-facing robots, as well as traditional B2B task-oriented robots. And the reason for that emergence, I really think, is a lot of the technologies that is needed to create a solution-driven robot has advanced to a certain point where it's becoming not only feasible from both a task completion perspective, but also from a cost-based perspective as well. So if you think about, a robot is merely an assembly of technology, right? So the advancement in sensor technology, the advancement of voice recognition, computer vision, AI, as well as mechanics related to that, all of these, alongside with big data and communication modules, all of those accumulate into an opportunity where you literally can see, and I'm sure many of you have already seen these devices, you see patrol robots in Stanford Shopping Center. If you go to the Aloft Hotel across the street from the Apple headquarters, they have a room service robot. And if you go to one of the Lowe's stores, you'll see an inventory management robot as well as a customer greeting robot. This is happening. And one of the fastest adoptions that are happening today is in Asia, across China, Korea, and Japan. So all of those angles I think are interesting.
Good. We haven't heard a lot about robotics tonight, so it's good you brought that up. Okay, Hans.
All right, so, I mean, we know, all of us know each other very well, so we're getting intro on front for very frequently. I'll try to change up a little bit. So we've been around since 2000, as you know, managed about $4 billion, US holding US and China. When China started investing, one of our very first investments was Alibaba back in 2003. And just seeing how Alibaba has grown, and Tencent and Baidu, all these players in China have just grown massively the last 12, 13 years. Whereas before, in China, in the early 2000s, you're looking for the right government relations, right state-owned enterprise to partner with in China, and that has been proved to be quite difficult. A over the last 12, 13 years. And whereas the internet companies in China is out of nowhere to become so dominant, do stuff that's very much regulated by market forces, very meritocracy, results driven. And so that kind of unleashing of internet and the economy, its impact on a communist controlled China is amazing. So how can we take that and release that to the rest of the world in some way, shape, or form? Have a business model focused on mass market adoption, have a lot of devices and apps out there, cross-source a lot of data, and then come up with better services over time. That's kind of the stuff we're excited about and try to help companies from China go global, like Musically, and then companies from the
Musically
US.
spoke at our Shanghai event.
Yes.
The co-founder, CEO, that was very interesting.
Right. We're probably now the largest VC in that company now, and it's kind of interesting how they've grown so fast in the US and Europe, and Southeast Asia over the last year and a half.
Not yet in China.
No, they're not in China. That's the interesting part. They don't know what to do in China. They're very good outside of China. And then helping companies like Wish, based in San Francisco, but everything you can buy on Wish right now comes from China. The customers are in the US and in Europe and developed countries. So these kind of perspectives are interesting for us to leverage and help companies like Airbnb go into China and try to crack the market there. And earlier, Jay and I worked on Misfit and try to help Misfit crack China as well. And Dr. Albert partnering with someone else that could, potentially take something that's in the form of a handset kind of digital camera, turn out into an interesting social app. So all these stuff, a mixture of hardware, software, and services and apps, or a mixture of community content and commerce is what we're very good at and trying to figure out how companies to scale while fine-tune the business model.
So you talked about startups, and you also talked about the Baidu, Alibaba, Tencent, Xiaomi factor. So today, where do you think that this innovation is coming from? Mostly the startups, or is it really trickling down from the corporate side, the big tech titans?
I think that the tech titans are very good at leveraging AI, machine learning, to apply that to consumer services. They have the data. If I look at just an e-commerce example, Taobao and Tmall, the stuff they've done over the last 2 years on personal recommendation engine, effectively that, Zhengming and other folks at Alibaba have recruited heavily in Silicon Valley of Chinese talent that are in LinkedIn, Google, and other places go back to China, go to Guangzhou. In their recommendation engine, you can tell the results are much better than it was before 2 years ago, much more authentic, much more merit-driven. I think JD is going to go through a certain period of adjustment to deal with someone who's not good. This kind of same transformation we saw in C-Trip 4 years ago by going to global, hiring people from eBay and so forth, go out of China. So this kind of talent cross-boarding is going to happen more and more frequently, and it's going to be very interesting. On the for the startups, it's guys like Musically that are trying to go global. They don't need a BAT to be their partner in order to do that. It's based on the team having more of a cross-border global DNA. And that's going to be very interesting to watch as well.
Good, thank you. At WI Harper, you have a greater China focus and also US. So what are you working on today that interests you? It's off the charts.
WI Harper, similar to GGV, so WI Harper has been doing cross-border investment between US and Greater China ever since, I think, 1996, 20 years ago. So basically, I'm based in San Francisco, but I travel between Beijing and San Francisco on a monthly basis.
Very frequent.
Maybe not as you.
They see one another at the airport, right?
The one of the purpose is to try to help our US portfolio, especially tech startups, to find their strategic partners and investors in China market, including Wing. So we as our portfolio, so help them to find key suppliers and strategic investors after we invest them. So that's the example. Also, we're working with hands on the companies that we just mentioned. Right? Yeah. So the trend I saw is that currently we see some emerging areas like machine learning, especially deep learning, like SLAM, computer vision. We find some top talents, top tech teams in Beijing, which is comparable to their peers here in Silicon Valley. Yep. So earlier this year, we invested in a company, basically a PhD student from Tsinghua University. He was with the Tsinghua XL program, the accelerator, which is our strategic partner in Beijing. He's working on the VR video station, which has a very much one of the best technology I've ever seen, including here in Silicon Valley. Another one is with Rebecca Fannin company. That's a group of young graduates from Beihang and Beijing. So that's the top schools in Beijing. So I think when we find some teams comparable to their Silicon Valley peers, we really prefer to invest in those Chinese teams because they already have a cost leadership. And we have very large young talent support in Beijing. They're very passionate, very, I think, self-driven, and can do something comparable to the world-class team here. Also, as we talk of EAP, right, we all know Baidu idea of having like hundreds of the machine learning expert scientists here in Silicon Valley. So before that, at Harvard, I worked for Lenovo, and then I do the strategic investment here in Silicon Valley. So I see those Chinese internet companies, they hire the Chinese engineers here, and then bring them back to Beijing. And then those guys now scale. They just left Baidu and form up their own company, like you have New Horizon, like Ren, this all kinds of this top deep learning experts. So we see there's an emerging country in China, which is like a local innovation hub.
So you're seeing this innovation shift then to China, you think?
Only a
From
little.
Silicon Valley?
Only a few
Only a
sectors.
little?
So for example, like deep learning, like SLAM, it's only happened here since like 5 years ago. So for these new areas, I think we have something exciting in Beijing. We have like, but for like 20 years, like OS, I think all this traditional engineering this sector, we still find that team here.
Okay, did I hear you say correctly that you would prefer to invest in a China team?
No, if they can find something comparable to Silicon Valley teams, really, for example, back in Lenovo, we invested in a company called MacV, which is C++. This stands out. Have you heard about it?
Yep.
And then we found a lot of much better team here. I won't mention any names, you must know some others, some not sold to Amazon. Back in 2011, 2012, I think the Silicon Valley team that also do the face recognition, they have much better technology, way better. But after 2014, I think this plus is the best team because it compare the any communication with benchmark communication, I always want the top ones. They beat Google, they beat Facebook, which is Facebook company. So why? But that team founded by two Tsinghua graduates. And they set up an office just in Tsinghua in the east, Tsinghua University campus. They just hire all those the best talent they can find there. They increase their team size to like 40 experts, machine experts within 2 years. But then the company here only has like 5, 6 engineers there because of the cost.
Right.
So that's why they start up that after 2 or 3 years. That's why we should.
I think in general, you see more innovation here for sure, especially on the hardcore tech side.
Yeah.
But in terms of productizing that to a services, that could be accepted by mass markets and then have ways to fine-tune that product so that it can always meet user demands and make adjustments. The Chinese are getting much better at doing that. Even though they have Uber versus Didi in China, Uber initially had a better product, better algorithm, and more innovations. When the Chinese look at it, Didi just quickly innovate, and then after a while, it surpasses Uber and come up with something even better. And the time it takes to do that, 6 months to a year, boom, it's gone. And the sense of urgency is so much greater in the top Chinese companies. It's someone's working 8 hours a day, or someone's working 14 hours a day, and quality per hour is similar. This is kind of scary all the time.
Okay, good. Karen, from where you said that, as Moses said, what are the deals that are coming across your desk that more and more today? And are you seeing any kind of pattern in the kinds of deals that are coming your way?
Sure. So unlike the other folks, that we actually are sitting upstream from one perspective or downstream from another perspective from you all. For example, we bring entrepreneurs to the VCs, help them pitch funds. And then once you're in, oftentimes the VCs actually separately brings companies to us where we take care of the portfolio companies and grow them from the ground up. So for example, Google started at Wilson, we took it public. Recent years we took Box.com public, LinkedIn, GoPro, you name it, many technology companies. So that should affirm as number one firms or in terms of number of companies that we took it public in NASDAQ. So in terms of the recent deals, particularly cross-border, and that's where the area that I emphasize on, we actually seen a more of the interdisciplinary area is actually having a robust promise down the road. For example, the merge of genomics with the data mining, the machine learning aspect to actually provide meaningful diagnosis or prognosis to the healthcare market, to actually bring, for example, e-health to the reality and tied into many different cell phone or other mobile devices together. Those are the area where you actually need two sets of skill sets at least. You need to know the biology, and you also fundamentally need to know the computer science, the network, and at the end, the actual consumers who's going to fully benefit from the actual product, whether it be app, whether it be device that you're deploying. So those kind of deals we actually seen in terms of investment, that these are very sophisticated people who are really pulling a team from multidisciplinary area together. And another trend that I've seen in terms of the companies that you mentioned, for example, Tencent and a few other robotics companies like DJI, for example, these are the largest drone maker, of many of whom are clients. And then we actually seen the trend of putting an R&D site here in the Valley or on the East Coast in the Boston area to really draw the necessary talents that China is desperately lacking for now. Now, at the operational level, to make that work and actually confront multi-layers of legal issues as well. Just so, for example, inventions, technology are generated cross-border, right? The idea is it's partly contributed by the US team sitting in Palo Alto, and also a team in Shenzhen, for example, right? And when that IP is generated, even from an IP protection perspective, where did you initiate the patent filing, for example, without triggering all of the two countries, first filing and foreign license laws and all of that? It is actually creating multi-layer of not only business issue, but legal issues that we're actually helping the companies to go through. So those are the things I say for entrepreneurs, and particularly the companies who are much more global facing, right? Started in China, global facing, that they really need to think through how they actually utilize the resources and more effectively.
I think we're all going to need your services a lot more in the coming years, because it is so, through this sort of globalization, you have really localized pockets of expertise across different, not only different industries, but portions of industry sort of companies, technologies that might be, for example, we talked about deep learning, machine learning. Silicon Valley now has no engineers. You can't hire any more engineers, right? So you have so quickly, firms like, or universities like Beida are educating people how to come up in machine learning and data science, and they're getting snapped up by companies really quickly. So I think within a short amount of time, we'll have U.S. companies, Silicon Valley companies outsourcing some of these things to China as well, and back and forth. The IP issues get complicated. The royalties and revenues sharing get complicated.
Yeah, the deal structure is getting very, very complicated, actually, when you're really projecting out, because you don't even know where the market is to some degree, and the costs are actually in a much evolving dynamic.
So talk a little bit about that, and you said the deal structure is becoming a lot more complex, complicated. So can you talk a little bit about, add some detail to that? What do you mean?
Great, so for example, when we do make these deal structures, and we oftentimes, depending on the cyber, let's give you a real example, when we represent the large Chinese, let's say, large entity, whether it be pharmaceutical or not, right? And actually, the first question is asked them is, why do they even want to make this deal? Is the driver a domestic driver or is it a global driver? Oftentimes, I can give you a real example in the pharmaceutical industry, and it's true for some of the consumer electronics industry. The reason is trying to make a differentiator amongst their domestic rivals, right? The deal was exactly the A-share was. It's not really the actual value of that deal is what is the perceived value and how much I can jack up my A-share price.
Right.
right? It's that story. So once you understand that, actually from making a deal perspective on the US side, it's a lot easier actually coming close because remember the positions are not symmetrical and that's actually the most interesting deals get made. So I oftentimes see that, I do represent American companies as well as Chinese and we see that actually a lot of opportunities can be made if you truly understand the motive, the culture behind it, and the way to approach these things. And I think I see a lot of brilliant VCs who actually invest in different stages just because they actually truly understand that, the motivation, the driver, domestic company from, the China angle, and which they make them making tremendously fast return on deals.
Go ahead, Eric.
Can I stir things up a little bit? Just sure you said, maybe think about something that's been on my mind a lot lately. A lot of companies, so I'm a China pilot. I lived in China for 7 years, invested in a growth capital firm there. So I'm a big fan of understanding different sort of business cultures and their strengths and weaknesses, and there's no judgment. But one thing I've noticed is that this sort of idea of propping up your valuations, Asia market through a lot of window dressing, has been, in the last year, I've seen just...
Last 2 years, yes.
It's just gone through the roof. And, it's about putting out a lot of WeChat releases and just constantly pumping the market with it. And you hear people react to that and say, there's so much that firm is doing so much. They're hot now.
Well, one example
Like,
for you.
what does that mean? They're hot. Oh, have you seen all their posts? Like,
Right.
well, is that?
Those is actively it.
Yeah. Okay. Right. And and actually there's a correlation, right? Because you can see some of the market caps go up.
Right.
I mean, that concerns me a little bit. So how do you ferret out who's actually creating value and who's not in this market? And
Well, and the Chinese stock market, domestically in China, is a retail market. So, not all retailers, all the retail investors understand or care about perception of value. For the short term, they definitely make a lot of gains.
whereas in the U.S., the institutions might be a little more thoughtful, long-term thinking.
They have to.
So which is better, going public in the U.S. or going public in China?
Even a company doesn't do well, but has a lot of flash, sell Chinese A-shares companies. If a company that will go the hard way, go Uber or DD, get the U.S. dollar VCs to back you, and you will have more hard, but the value generated likely to be more sustainable. This is generalizing it, but that's one of the two directions.
Okay. Well, what are you seeing today in valuations? I know last year was kind of a peak year in terms of valuations. Where are you seeing this cycle now? If you're a startup, what can they expect in terms of the market?
I'll start. We see values going to come down a lot in both markets.
A lot meaning?
A lot meaning anywhere between 30% down, 40%.
30%?
To from last year
Okay.
to down rounds. So a lot of companies, either unicorns or close to being unicorns, are doing down rounds. It will increasingly report more. I mean, we saw something about DGI versus competitor here in the U.S. yesterday. So you will see more of that kind of press over the next 12 months for sure. And some of them will be kind of eye-opening. In China, valuation is also coming down, but for the interesting strategic categories, valuation is still high. Like DE backed two bike-related companies. One is in the campus OFA, and the other is on mobile. Both valuations just backed by DE. So you still see some of that in China because the new category is a lot of money looking at it. But in the U.S., you definitely do see more broad-based correction.
Yeah, today we still see a much higher valuation in China markets than in Silicon Valley for the same same quality tax dollars, usually maybe 2 times even. Yeah, because of
2 times higher valuation in China than the U.S.
20 million valuation here,
Wow.
20 million in China. So sometimes it's very hard to compete with Chinese for the raise R&D and then transfer here to US dollar because here. Very hard to compete with them on that valuation part, of course. And the reason is there's simply too much liquidity in China. Just because the government is printing too much cash. And then all the cash go to first the sector, top sector is the real estate market, housing market, and then it's actually investment market. Especially in the early stages, right? in China we call it 双创 innovations are. So how money directed by the government or local and central government to this equity investment sector. That's why we have too much money in China. And then they have not very many good tech startups in China. Then the price is higher.
Go ahead, Barry.
And that's what I'm hearing too. A lot more, just give you personal accounts, and a lot more friends are coming back to the Silicon Valley to look for deals. In part just because, one, they feel the technology is actually more reliable, more sophisticated, and two, it's just valuation is more reasonable.
But I think a lot of Chinese investors will be disappointed by investing here because the execution speed across the board is not the same. So it's easy for a Chinese investor to come here and see, oh, that technology is so cool, and I don't see that in China, I'm going to invest in them. But the guy with a lower level tech in China actually execute better. The one that's kind of flashy, maybe just, it's a side project. So it's not something that the Chinese investors have done through. So I think over the next few years, more learning will be realized here. On top of that, the Chinese government is putting forex control, so it's hard to get exchange renminbi for US dollars. You have to go through personal accounts or business with operations here to be able to do that. So that'll slow down a bit as well. But I think that BATs of the world or the A-shares guys probably end up being more acquisitive here over the next few years.
So in terms of how you're spending your personal investing time for your VC funds, and also Eric from the fund of funds perspective, U.S. versus Asia, percentage time, U.S. time, Asia time.
Well, we're much larger in China just because we've been there for a while, but we're investing about $100 million a year in the U.S. And we do spend a lot of time thinking about sort of capital allocation across geographies. And so we think about things like this. Okay, why is it that some of these Chinese startups are moving faster, and yet you sort of take a look at it's a higher flame out rate with Chinese companies. They seem to hit Wong faster. People
Really? You see that?
Yeah. And I think that part of the reason is that US VCs come in and they step in and find ways to prop it up, sort of let the company.
Interesting. We see the exactly opposite.
Really.
Yeah.
So we're investing institutional capital for Chinese investors, and there's a big appetite right now to invest in the U.S. And I think that's partly just a desire to get access to U.S. technology and to U.S. growth and stability. And also there's a component of wanting to have capital offshore, worries about the RMB, further appreciating.
So in terms of your time resources, U.S. versus China?
I'm sort of 80% here.
80% here. Okay. Jay? U.S. versus Asia, because I know you're doing more than China.
Yes, well, so for us, in terms of our investment focus, it's been focused on U.S. startups.
Focus on U.S. startups.
Yeah, so
Okay.
on the investment side, 90% plus of the investments we made are U.S. companies. But in terms of time spent, which was your question, for us as a firm, it's almost 50-50. In my case, I'm based in the U.S. and I travel to Asia every other month or so, spending about a week or two. But we also have partners that are full-time based in the major Asian cities that we cover, from Beijing to Seoul, Tokyo, and Taipei. And so collectively, it's almost a 50-50 effort. And it requires that much effort to make these partnerships work. I think, at the beginning of this whole conversation, we talked about how difficult it is to make these cross-border partnerships work.
Yeah.
And we do that for a living, and it's hard. I mean, it's not trivial, and it requires a lot of face time, a lot of hand-holding. It's not one of those things where you can make an email introduction and hope for the best. You physically need to travel with the entrepreneur, take them on a personalized roadshow, and you're, as a friend, introducing another friend to your friend based in Seoul or Tokyo or whatever. And that's what we do, and that enables us to get to know the company really well. The feedback gives us validation about the market, the product, technology, and we get a good flavor of the execution. We do all this before we invest, so there's a large upfront commitment and investment on our time and effort before we get to investments. Sometimes I wish it was easier, but that's kind of our investment mandate. I think what's interesting though is that, and even for us, I know there's a number of firms that invest in Asia. We've just launched a fund actually in Korea to focus on supporting Korean startups with the same network that we have expanding to other parts of Asia. And what's interesting is if you think about it, it's actually even harder in many ways, right? and a lot of these entrepreneurs out of Korea, but they are always like excited to come to Silicon Valley and they want to tackle the U.S. market. Well, the reality is the U.S. and the China market are the most difficult markets for any non-domestic company to compete against, because if you think about the advancement and the development of the startup ecosystem, and by definition startups go after niches that are not filled by the bigger companies. Those niches in China and Silicon Valley are already filled out with domestic startups. So if you are an overseas startup, I don't care whether or not you're from Korea or Taiwan or Israel or France or Germany, it's going to be hard to recruit the best people. It's going to be hard to attract the best capital. And so it's harder. Now, what we do is, luckily among the areas that we cover, there's actually a pretty large market that the ecosystem is not as competitive or advanced. And that's the Japanese market. So 9 out of 10 times when we talk to Korean startups, we send them to Japan. And they've had a lot of success. If you think about the leading tech companies in Japan today, a lot of them are Korean companies. Right, from the leading messaging company to the gaming portal, security software, enterprise software, there's a lot of success there. So again, I'm kind of rambling a little bit, but when you pick and choose the international expansion opportunities, our rule of thumb is to always go for the lowest hanging fruit, the path of least resistance. Because if anybody's played Risk or or the very popular game Three Kingdoms game, you go after the least strong province before you go after the big guys, and that's how we advise these companies to expand globally.
Okay, we start from North Beijing all the way down to Hong Kong and Shenzhen and all. In terms of legal fees, I was just thinking about this. U.S. companies certainly still, in terms of the actual absolute value, is still more than the Chinese company entirely, but the rate of increase. Right, if you look at the delta, that's actually very significant. That the Chinese companies are definitely increasing in terms of number and in terms of the actual value. And so that's, and then I think this is just not stoppable. For now, the China outbound investment is just
very strong.
I know, so my partners, their jaw hits the floor when they see our legal bills here in the U.S. What are you doing with these people?
I really think it's a good thing for the Silicon Valley, in particular entrepreneurs right now. You can find much cheaper money than probably than other domestic VCs.
That's why we have to sector focus, so we can provide value on our sector. Otherwise, there are cheaper money on it for sure.
I'm glad you talked about the outbound deals, because one of the issues that's been going on for a while is that large Chinese tech companies coming in and acquiring U.S. tech companies, startups. And I think there's been some press about kind of a pushback about that, whether that's a good idea, whether Chinese are in it for tuition reasons. Take the technology and run. Does it benefit a U.S. technology company to take money from a Chinese acquirer versus, say, a venture capital fund? Can we get some opinions on this whole trend of the China outbound into U.S. technology companies, whether it's working or not, whether it's a good idea or not for a U.S. startup?
Well, we've seen, there's definitely a big we actually graphed 5 years ago, the amount of outbound M&A from China to the U.S. has increased like this, and I think Bill said it's going to keep on going, and it's for all kinds of reasons. I mean, for people do it for strategic reasons, and technology acquisition, and getting into new markets, and all very rational, sound business reasons. But the thing that I think is the shift has been, what we've noticed is that the companies are more often willing to hire local managers instead of bringing their own people that use sort of more of a control aspect. And that tends to be tough. Like you take managers from China and put them in the U.S. market environment, and they don't know how to navigate the market, grow the businesses. And I think there's more of a tendency to figure out how to retain good U.S. managers and to provide provide sort of oversight of the company in a way that you can keep the U.S. management. At least there have been more companies that are succeeding under Chinese ownership in recent years. You know, on the margin. Right?
Yeah. Jay, I know you have a view on this.
Yeah, no, I mean, I think my initial reaction is, what's the problem? I think it's awesome that Chinese capital is interested in acquiring U.S. startups. As an investor in some of these startups, I think it's great. We just had another announcement the other day. I'm on the board of a company called Chartboost, and they're one of their largest competitors. AppLovin was bought out by a Chinese investor for $1.5 billion. I mean, that's good news, because we'd like to think we're doing better than they are. But the point is, I think, as Eric pointed out, it's going, for this to be sustainable though, it has to be, I feel, more than just window dressing for the AirShare stock price, because that eventually, I think people will get educated and sophisticated enough that that bubble will go away. And ultimately, whether or not these acquisitions create value depends on the post-merger management of these companies, right? And so I think it's early days. I think it's great that, you know, because the guy next to you or the company next to you is jumping into the US, then a lot of people feel emboldened to jump in as well. And I think that's what's happening. And I've seen that happen in Korea and Japan as well. But ultimately, the Japanese buying spree that happened in the 80s and 90s, and some of the Korean companies that were very aggressive in the 90s and the early 2000s, that faded away because they had massive blowups of companies that have acquired and then, you know, basically mismanaged. And so all the core employees left the organizations and they were left holding a shell. I mean, I can tell you, Samsung went through the same thing, and it took them over 10 years to recover and build up the confidence again to go back to that M&A pot. And they've just recently, in the past 3 or 4 years, started to do that. And so this trend is great, but I fear that it may not be sustainable. So if you're lucky enough to take advantage of popping your share price or selling your company, go for it.
Yeah.
But you know, ultimately, I think there will be a learning curve.
I see.
I think a lot of Chinese companies think differently. Chinese companies are very good at figuring out short-term, I think, especially outside the internet, are very good at figuring out short-term opportunities to make money. Some people in the audience may know this financial service firm in China called Jody. Who knows Jody? Right. So they're very good. Just 2 quick seconds. They came out of the stock exchange regulation body in China. They started a fund. They raise money and they go around investing in a lot of a lot of companies at 3x, 5x PE. And they knew that the Chinese stock exchange was going to open up again for IPO. So they did the investing in over a 3-year period and pushed a lot of companies to IPO. And they got their money out. Once they get the money out, they continue to build up the operation, go after become a listed company as a financial holding company. And once they have money with the public currency, they went out and acquired insurance business. So in the span of, say, 8 years, they transformed from a growth venture firm into a financial service holding company listed on A shares with insurance money that's real, and it completely transformed itself. Kind of like what PCW did, Richard Lee did back in the 90s, but this time it's supposed to same. So you could see a company do that. Each phase played a different tactic to get them to where they want to go. So that's why a lot of people here speculate what Le Shi is going to do, because they definitely use their stocks as collateral to get more money, go out and acquire companies in the US, hire people at 3x, 5x rates in the market. But if they can somehow take all that money and generate real revenue, the Chinese stock market could continue to support them. Or they may not, it makes execute, and like what Jay said, a lot of people will leave. We don't know. No one knows. Let's see how it goes. But for the next 3 to 5 years, we will see a lot of Asian companies come here, buy, and if you're a smart VC, you have companies that are working all well, sell to them. Yeah. Get exits. They play the game, you play the game too. Stop worrying about them. Make sure that you take advantage of what's going up. But at the same time, still invest based on fundamentals and based on what makes sense. You got to be able to figure out how to realize value in your portfolio. Yeah. So as a practical VC, you're going to be aware of the trends. There's no need to judge them, just take advantage of what's going on.
And negotiate down your earn-out, right?
So Eric, I peep you invested in a number of these funds. venture funds. What do you see that from your side, from your perspective, that the VC funds could be doing better?
I mean, that's a big,
Putting you on the hot seat, I know.
yeah, no, that's a big question. And every firm is different, and our job is to try to, if possible, just try to figure out the trend line of the group and the dynamics with the people and how they're thinking about the future and divining then how that's going to translate into results. I think the toughest thing that we talk a lot about cross-border today, I think a lot of people underestimate how difficult that is. And Jay's firm is a good example, and actually GTP as well, of having real, true examples of having brought value cross-border, helping a company find the right general manager in China to enter the China market. It's really hard work. And right now, with these capital flows increasing so dramatically right now between the U.S. and China, you're hearing this story a lot as a fund investor about how we're doing a lot of cross-border adding value, bringing Chinese companies to the U.S. and vice versa. But very few have real good ones and have real examples of how they've done that. And it comes down to the resources on both sides, the sort of deep networks within both countries, and actually the time. It comes down to an individual's time. As Jay said, getting on a plane, and going to, work with your contacts and twisting your arm a little bit to take a look at this little startup.
It's hard work. It's very labor intensive, time intensive.
Right.
And a lot of these teams are small, right?
And we're not getting any younger. So.
Okay, what do you think about the new generation of tech talent that's coming up and the tech future? I mean, we talked about all this kind of esoteric stuff. It seems kind of esoteric in a way, but it's going mainstream pretty fast. Like IoT and VR and AR and AI and robotics, and how does this tech future compare to what we saw, say, a decade ago? With the .com boom and all that. Is this stuff more explosive? Is it more disruptive? Is it really going to change our lives? Any views?
So I started to feel a little bit worried about the investment of the tech sectors getting a little bit overheated, especially in China right now. It's a central government-driven movement economy, innovation-driven country, something 创新驱动发展. So a lot of money. So if you mean the technology is one of the barriers, it's not necessarily creating value for the shareholders, for the consumer, for the investor, right? It's only one of the barriers. And with all these barriers, have to protect something that with real value can generate revenue. Also, the time is another thing. So we are talking about VR, but the way it's done is mentioned market as a tipping point, not looking forward to it, but it's still expecting to happen sometime soon. So, but for all these tests, for example, like deep learning, many very, very top deep learning scientists all over the board. Like for every year, like credits from Stanford program, all to the same job. They're not trying to compete with each other. Okay, I have 96% on 9%, you have 10%, 96.1%. So it's a little bit higher accuracy, but it doesn't make much difference in business value sometimes. But one dominance like Google brand, if they can do the best job, maybe all the rest of the firm should change to use their AI engine instead of using all these AI companies which is invest or going to invest. So that's how I see a bubble is forming right now. But it's not really, there's still a couple years before it can really bust. What happened?
Okay, couple more years and we're going to be in this tech bubble. I'm just kind of curious where it's all leading. How many of you really think that VR is going to change the way that we heard earlier today from the VR panel, that it's going to replace mobile?
Yes, 10 years.
10 years, really? Okay, Jay?
I don't think VR is going to replace mobile at all. I mean, VR is one segment, and I'm a big VR fan. Hopefully Eugene did a good job earlier today. There's a lot of excitement and interest in that area, but it's still very early. And because it's early, I think there's plenty of room for that to evolve. And so I think it's going to be two directions. One is there's what people call deep VR, which is much more immersive, and it requires a lot of cost and effort. Because like the HTC Vive or the Oculus, I mean, it's expensive. It's kind of a hassle to put on. But once you've gone through the effort, the experience is unbelievable. It's mind-blowing, right? On the other hand, more accessible mobile VR is going to be available for a lot of people to experience. So it's going to be a divergent area. To me, the thing that is going to be life-changing or job-changing is going to be more on the AR side.
Yes.
Right? Because if you think about value proposition of AR, for those that are not super familiar with why VR versus AR, the simple way to think about it is VR is you wear a mask, you cover, so you don't have any interaction with the outside world. AR is the Terminator movie, so you have interaction with the outside, you can see everything, but you have a computer and all the data, and you can use the sensors to identify what's going on. So imagine, if you have any car trouble, opening up the bonnet of the car, and instead of like just looking around and kind of just
What's going on?
trying to figure things out, you would have an AR application that would assist you to identify which specific part in your engine or the bonnet might have an issue, and will actually guide you to potentially repair that problem. And so you can see those applications in medical applications for surgery, for logistics, for warehousing, for manufacturing. All those different areas are going to change the way that we do our jobs. So to me, that's life-changing and more impactful. In fact, I mentioned robotics earlier, but that's another area that is going to take away, frankly, including autonomous vehicles, a lot of the mundane, repetitive work that, frankly, there's a lot of employment attached to that. But in theory, you'd like to actually do something a little more interesting, creative, less repetitive, and so you can offload that to machines. And in theory, at least, do something more creative. And so the net of it, and I'm more on the positive side of that kind of futuristic society, less dystopian, but I do think that that opens up a lot of opportunities for people to do more interesting things, have more fun, be more creative.
You mentioned VR versus mobile. 20, 30 years ago, there was a huge debate as to what's the future of mobile. It's going to be satellite-based. Motorola had their radium project, right? You want to have reception anywhere in the world.
Yeah.
And then the other way is 2G, and these phones are big, bulky, but the cost of rolling out is a lot cheaper than versus satellite. And once you have people do that, the bulky phone becomes the phones that Motorola and Nokia talked about. So with happening with VR, we also think that AR makes a lot more sense. Also, mobile-driven VR makes more sense. Look at Pokemon Go, so simple, such a simple application we are, but it's so popular and it's extremely profitable. That kind of company that can do that, have a wide install base, are more likely to do something more innovative, that's heavier duty on top of that. And so we think we're much more bullish on that kind of company to build something interesting over time, rather than a pure, complete immersive VR company. They can still do well, but like Eric said, may take a long time.
Okay. Let's get some audience questions. I think I'd like to give the mic to you.
I'm Kelvin, I'm in the family office. So I've been doing this for a while, and I like to look out 10, 15, 20 years. And so for the last 15 years, there are two problems that I've been looking at that haven't really been solved. One of them is battery life for mobile computers. We should have 1 month, not 1 day for batteries. The other one is branding in China. I'm still waiting for someone to really do a good job branding in either China or Asia. And these have been long-term problems with not real solutions.
Anybody working on that mobile phone issue or the battery issue?
Yeah.
Right.
Yeah, sure. So by background, I'm a chemistry major, so I've looked at batteries since my days at Samsung. I still look at battery technology. I mean, there are fundamental limitations in terms of battery life improvement. It is improving. Most people don't realize this, but exactly, there's incremental improvements that are happening because a lot of companies are experimenting with changing materials and structures to increase efficiency. But the annual percentage of efficiency increase is in the 2 to 3% per annum basis. And these are led by the biggest companies because they have huge plants and they have a lot of R&D folks. So that's not going to fundamentally change the equation. Now, in theory, there could be a lot of interesting, frontier technology that includes, interesting concepts like fusion technology and whatnot that actually could boost it. The challenge is that manufacturing is one thing, and then safety adoption is another big thing. Because by the time, even if you have more efficient batteries, and by the way, there are more efficient batteries out there, but potentially these are bombs. And so everybody's heard of what happened with the Samsung Note 7, and every time you board a plane, they actually specify that to the chagrin of my former colleagues. But the reality is that's going to be limited by not only the chemistry and science, but also by adoption based upon safety issues. So that's the problem. And I think for the branding, I'll hand it back to Hans.
So that's something that how Chinese branding emerged to be global is something we have to spend a lot of time. Fundamentally, what it takes to win in China and expand beyond China are two different skill sets. Because in China, it's just still extremely competitive. Look at Xiaomi, a perfect example. It doesn't matter how well they do. Each time a new phone comes out, someone like from Oppo or from Huawei continue to compete. So you have to do that well, hold on the fort, be very lean to do that. Same time, going out to market elsewhere, very different. Now, Leshi has become very aggressive at doing that. They're going to launch here very soon. I'm hoping that they won't bomb for all Chinese sake. But I'm not sure holding Leshi, but don't embarrass themselves. Let's see how it goes. But it's not an easy thing. I think what's more likely is that someone who is Chinese American or Chinese who have been here for a long time can build a company that kind of is cross-border and leverage resources both here and there. Music.ly actually is a good example. The co-founders come from Shanghai, but one of them, Alex Stu, worked in the Valley for 6 years, and that made a huge difference. If he wasn't for him, Music.ly wouldn't do as well in the US. But at the same time, if the CEO, Lewis, wasn't there, be very aggressive, pull Alex to take risk. Most of the Chinese folks who are living here are working in big companies, have a nice job, and are not taking as much risk. So you need a combination of both to try to build something quite interesting. I think I'm hopeful, but we're constantly looking for that magic formula.
Okay, one last question right here, and let's get a mic to you, and identify yourself first, please.
Michael Peck, I'm running EOCell battery company.
All right.
All right, you don't have to say anymore.
He's my friend. Actually, I think I may be the real battery guy. I can answer about actually the safety.
Okay, real quickly.
Okay.
Like 2 sentences.
I know the Jayun, you work in Samsung. So lithium-ion battery is not the right solution for the VR and AR. So however, there is a new battery actually we are working other guys, a solid state battery, which is energy density is 4 times better. It's basically ceramic based. So lithium-ion battery is okay, but something happened, then there is a serious problem. But alternative technology like solid state battery will resolve, and then it lasts maybe 4 times, 10 times longer. Means one charge actually at least 3 days, 1 week. So there is a possibility more than 20 companies working in the States.
Any comment? Any response to that? No? Okay.
Let's just say, there's always been dozens of companies working on next-gen battery technology, and yet for 30, 40 years, it's still lithium-ion batteries. Right? So you may be the exception, your company may be the exception to break that mold, but let's just say I've seen dozens of companies fail to get to
For example, actually, we have RFP, you can confirm to the Samsung.
Okay.
We have RFP designing battery, same battery for the Galaxy 9. You can
All right, good job.
Okay, great.